Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. TGIF. Welcome to Friday. It is the final day of January, which is quite shocking, really, what's going on in the market here, because my whole thesis of this being an up year is falling apart. Boo, hiss, hiss, boo. Like I always like to start off our conversations. Where did I put it? Usually. Oh, yeah, that's right. Remember, I had to move over here. Start off conversation with just sort of what's the backdrop of the world. And, I even put a tweet out today. And, please. A gnarly old trader talk here. It isn't necessarily like I'm a jerk and I don't have any empathy for people who have the flu and, heaven forbid you should pass away from being so sick. I mean, that's no good. But what I see happening around the world is it's almost like an absolute orchestrated orgy of fear that's being created here. They have said that I think the total number of deaths from this coronavirus is something in the neighborhood of a couple hundred people now. Just for fun, I did a Google search yesterday, and it turns out that, about 80,000 people die in the United States of America alone every year from the flu. And if you do the math, that means about 200 people a day die from the flu in the United States of America, let alone the world. So I encourage you to put this into perspective. I also encourage you to ask yourself, is the public being encouraged to be fearful here? Is the public, is this injection of fear and the change of conversation working to anyone's advantage? Me personally, tinfoil hats, I believe that it is. But having said that, all I ask is just don't get too sucked into fear. As good old Roosevelt would say, the only thing we have to fear is really fear itself. Don't get too sucked into the actual fear of what's happening here. And always ask yourself, is this actually playing into somebody's hands? So with that said, the risk-off assets are enjoying a very comfortable market. It's interesting how the gold, though, has not popped out through the top here. That surprised me a little bit. Bonds, as I've sort of said recently, are continuing to enjoy a bid, but, the irony of it all is they're actually coming right into what I would consider a selling location. Having said that, as I had sort of said yesterday, certainly no sell signals here, so I'm not doing anything on either of these. I do have a put option. And I was sort of scolding myself through the daily brief with the site members, and I was sort of saying this to you guys yesterday as an options trader. Little bit sloppy on my part, and ironically enough, had I taken profits where probably I shoulda, woulda, coulda, of course, all that hindsight talk, I'd actually be thinking about getting back into the short now, but I'm still in my original short, and we'll just let it work. Like I said, good part about options is I don't have to worry about liquidation or margin calls or anything like that. It's just the price of the option. As I had sort of said a moment ago, my old sort of January barometer thesis, and this being an up stock market year, what the hell's happening here? Everything's falling apart. Also, too, interesting options expiry. They usually say most of the business is done on the Thursday prior to options expiring. We'd sort of done some options analysis, and it seemed like if they could park the market right up in this area, they hit an absolute home run, the options boys. So this has really derailed them. They're not going to be overly happy about that. And keep in mind, everybody, if Wall Street loses money, do you think they're going to be happy? Do you think they're going to be friendly to the public? No. So painting a nasty picture here for the end of January and the January barometer. I'll tell you, if we finish negative on the year, technically that means that we're probably going to have a down year in the stock market. What's fascinating, of course, is I do believe that we are going to have a fairly robust spring. But, according to this, something just absolutely falls off the bus midsummer and into the end of the year, I suppose, into that U.S. election. Things the traders are anticipating that, oh boy, it could be a bit of a challenge. So anyway, you shake it. Not overly impressed with that, but also too, given how late we are in the cycle and my sort of ramblings of late about, years that end in 8s, 9s, 0s, 1s, and 2s. Usually there's a recession somewhere in there. So maybe we're getting ready for that event. Tough to say right now. What I will say in the short term is I'm definitely in sort of risk off thinking. Risk off proxies are getting bid up. Risk on proxies are getting their asses kicked. What's really interesting about this is the U.S. dollar index is coming off. Fed, of course, had their event yesterday. I think probably the biggest thing that they told the market was that they are going to continue their T-bill purchases, but it's not QE. Do you believe it? I don't know. From what I understand, the Fed's balance sheet did get to absolutely insane levels, something like $4 trillion, and they worked it back down. So they do actually have some wiggle room to increase that balance sheet back up quite a bit and still not break those old levels. Maybe that's why the gold hasn't broken out per se, because the actual money supply hasn't increased back to those crisis levels. I don't know. That's a tough one. But I definitely think that coming out of the Fed announcement, on the other side of it, traders were not impressed with owning U.S. paper, and they let it go. Also, too, keep in mind this was the big Brexit event, and I noticed that the euro finally kicking those limeys out of their union. The euro enjoyed a nice counter-trend rally, and of course, the Brits aren't going to like me saying that. So you can see the euro, and interestingly enough, the euro is actually counter-trend rallying right back to the low of value and right back to the original head and shoulders fail level right after a 1.618 tag. That's incredible, eh? So I personally think, head and shoulders, we do need to work our way down here. If you can get that buying window below 110, great. But it looks to me like you can see, and if you ever see like these kind of tails on your chart, it simply means that the market wanted to work down, and it just was running into buyers, and after a while, the market says, fine, I'm going to go up now. I suppose you could argue just off of this simple range alone, what's a 50% rule? So 111.5 there, 111.6, and gee whiz, that's the POC. What a coincidence. That's probably not a bad level to be thinking about for like counter trend rallies to exhaust themselves, and you can see that would be right up against these sort of clothesline levels there. So interesting, let's just for fun, 6BH2020, British pound, same sort of thing. Got to give your kudos to Goldman Sachs for calling the bottom. And this actually looks extremely body to me. So if we go something, you could do it off of that entire range. Maybe we'll just do it that range just to keep it simple. Something along those lines, and something like that. And now we have 1, 2, 3, 4 lows to work with. That's quite a bottom there. So where is the bot entry level? It is right off of there. Oh, and actually that makes sense. This would be a good example of sort of front running the bot. So you can see you've got what we like to call a LJ or lean setup, RJ we used to call it way back when. And if you can get a W on the other side of a trend line, then that actually becomes a nice little trade entry. So interestingly enough, I get the impression that this is a buy the probably a sell the rumor, by the news event. So, gee whiz, 142. Looks like British pound wants to work its way a bit higher here. Should probably let all the Brits on the site know about that. I'm going to post that in the lounge just because that's such an interesting chart. Actually, I don't know where the lounge is, and I'm doing this right through the Daily Brief recap, which makes no sense whatsoever. But what the hell, I'm having fun. Interestingly enough, if your currency is going up, does that help your stock market or does it hurt your stock market? In a weird sort of way, I actually think this might actually hurt the British companies because they're going to be a little less profitable in their international trade. And I noticed that I have this fun bet with an old site member who comes on the site and does reports for us every once in a while on macroeconomics. And we made a gentleman's bet who would outperform the U.S. market or the British market. And I get the impression that the UK companies, along with everybody else getting their ass kicked, I get the impression UK companies are going to underperform. We'll see how it goes. Maybe interesting to see how Germany's reacting out of that. Yeah, Germany's also on the sell side. So we'll see who outperforms and who underperforms. But I don't know. It's awfully tough for me to make the bullish case of British stocks right now. But we'll see how it goes. I suppose you can make the argument it's awfully tough to make the case for it being bullish of any stocks right now. Hey, caramba. And actually an interesting sort of proxy on the coronavirus, all that. We have this fun little trade going on in the shipping sector. I bought this shipping stock off of this W here, and it was enjoying a really nice rally, and you can see they brought her right back down to the bottom end of the range. And recently, another site, OG David, he was touting this idea, and I liked it so much I bought that W. And you can see how both of them have come right back down against the bottom end of the ranges. Neither one is broken down, so that's encouraging. And, of course, if it does break down, I'll have to try and get the hell out. And, of course, we got a fun story to tell you about that in the stock market today. But on balance, I'm watching the shipping stocks here as a really good sort of proxy on global demand. And whether this is actual, like rubber meets the road, things like Baltic Freight Index start falling off and stuff, or whether this is, in my opinion, maybe this stuff going on right now is a little bit overblown, but I'm going to let the market tell me whether global trade is really in trouble here. And if these stocks break to new lows, then I think it means that it is. Well, we'll see what happens. I mean, these are very junior names. We should probably be watching things like Seabridge. And I think I did see it breaking down. So, all right. So, risk on, risk off. Risk on is off. Risk off is on. In the stock market, you win some, you lose some. You got to get used to this. We're just managing a book of assets here. Here's a good example of one that's actually treated us quite well today. It looks like it's actually backed off a little bit. It was quite a bit higher earlier. And we're long off the W here, so you can see that trade's working. And here's an idea that I strapped on recently. Bought this W, and it's not working. It failed. So, live by the sword, die by the sword. I think I was showing you guys, I had a little penny stock that I picked up recently that failed. There is that ADRO. It looks like it's a good trade. I'm just going to sit and be long, stay long. And, of course, if it doubles, I'll sell half of it, the story. But half of our problem as traders, especially if the broader market starts breaking down, and what I've noticed, we talked about this in the regular video for the site today. Things like the Russell 2000 are looking a little problematic here. Right? We should probably be thinking about things like, at the very minimum, 50% retracements. But my hunch is probably we're going to have to, through that sort of February, March, where we see, things like January barometers, like we did know that, oh boy, there was a lot of heaviness coming out of the gate here for February and March on both of these reports. So looking at this Russell 2000, my hunch is we probably got to come down, fill in gaps here. And this is in essence just basically taking back that late fall, early winter rally, which kind of sucks, but a spade, call it as it is. So a lot of the recent names that I put on, watching very, very closely, you know me, I don't take big bets on anything. And if they break down, you just got to call a spade and walk away. So I wanted to show you, there was one name that I bought recently that basically I'm trying to get out of now. And now it's basically the same thing with that truck sack. The good part about what I do is I'm an open page. I'm an open book here. If anything, it should be fun for some of you just to watch this crazy Beamish guy going about his insanity. And I'm not telling you to take any of my trades. Really, what I'm trying to do here is just sort of just be a demonstrator. Demonstrate, Brian, how to lose money. Okay, well, this is and actually it was kind of cool. We did a fun. Kevin and I were joking earlier. We were kind of kicking around this idea. Actually, ironically enough, to be a trader, you actually have to learn how to lose money, and how to lose money correctly, which I thought was quite amusing. Here's a really good example of an idea that broke down like a week or so ago. I'm still working my order. Hey, it actually is having an up day here. Any kind of counter trend rally, gaps up top, and I'll report that I got filled when that happens, and just on to the next trade. Just managing my book. This is an idea that failed, and I'm managing my way out of this thing now. And we got another gift, and actually this one kind of bums me out. It's a little bit sloppy on my part, but nonetheless, took the trade off of this double bottom on the anticipation that maybe they were turning the company around, and they come out with news overnight. We are not turning the company around. In fact, we're losing even more money. Yay! I had originally said when I bought this that I was going to enter off of here and I was going to risk against this original bottom's low, and you can see that's been broken, so I've been politely told, get the hell out. So, again, left a huge gap. I put, I think, $500 into this trade. So, it's not like it's like somebody's holding a gun to my head. I'm going to get a margin call. I'm going to get liquidated by an exchange. That isn't this kind of trade. This is, I just went and bought like 50 shares, I think it was. And took a chance. Now I'm going to have to manage my way out, and as you can see, I've just parked my order to exit this position at the gap. So any kind of gap fill, it might take a week, might take a month, but I'll let you know when I get out of this, because I love showing you guys how to lose money. It's a trader's life, I suppose. I think I've told you before, and it's kind of fun when the market's running up and you're like, woohoo, look at this winner, oh, look at that winner, oh, look at this winner. Ironically enough, and what you'll often find is whether feeds can continue, is whether they can actually show you, oh boy, I had to take this loss, oh boy, I had to take that loss. And did they do what they said they were going to do? And that's really the whole purpose of this feed. What you might actually, or what I might actually find, is that the viewership goes down here. But really, I'm using this feed and communicating with all of you to really demonstrate to myself that I can actually run a trading plan. And of course, the whole idea here is we'd like to make some money at this. So I can comfortably say account balances are very healthily positive, so there certainly isn't any concerns about losing money. But now it's a question of, look, I put on a few trades later on in the move as things were exhausting. They were kind of maybe a little less quality trades. Don't let one trade absolutely destroy you. And if you're wrong, kind of like I had to admit yesterday, there was an idea that forestry stock that I was wrong on, and I had to take the loss and walk away. Well, same thing here, folks. So with that said, some uppers, some downers, some you actually have to act on. It's a trader's life. Good old Bitcoin. Finish off this free video here for you. See if I can get the chart up. There we go. We've sort of talked to you guys about this before. Very Wycovian the way she's been stair-stepping her way higher. I'm getting a little concerned about the internals are starting to look a little heavy here. Uh-oh, here comes a new M and RSI. You guys all watched all the tutorials about that recently. So, if this M does come in here on RSI, does that mean that the bull is on pause here again? My hunch is yes. Actually, we had a really cool conversation in the daily brief today about two concepts actually we teach in our school program. One's a level 2 concept, one's a level 3 concept, and both of them are actually suggesting that this is actually a short setup. So we had a great conversation about 3 drives harmonic patterns. And we also had a really cool conversation about gap theory and gap theory painting price objectives and how you use gaps to sort of validate that we're actually coming into the end of a move. And as I had said earlier, we talked about harmonics and this 3 drives pattern coming into higher time frame structural levels. And gee whiz, at our harmonic level, in comes big fat divergences. And you can see how I've sort of painted in the conversation today with site members how our RSI would actually spit up a big honkin' sell signal here if we get another failure. So interesting action, really, really great analogy. And this is now off of, we're moving to higher time frame, 4 hour. You can see that M came in and stopped the bull in its tracks. So at the very least, all us bulls have got to go, ooh, cool your jets. And what's worse about this is that was a divergence. And now if we get a second M that takes us through the 50 line, uh-oh, that actually might set up a trade. And then also too, oh boy, keep in mind, all these gaps were gap theory, painting upside objectives. Now, we probably got to go through the process of filling in some of those gaps. And then, of course, if we think about things like reload zones, original market structure bottoms, volume profile. Look at the size of that valley and profile. Ooh-wee, that's huge. I'm starting to get a little leery here about the corn. So, and then also too, is Bitcoin a risk on? Is it a risk off? I don't know. But my hunch is if risk takers in the market start backing away and start freaking out and start covering and maybe even shorting, it's going to take some of that buying appetite away from the corn. That's just my feeling. And it's also, too, in the face of this, oh boy, be careful, everybody. And keep in mind, this is a futures contract now that I'm watching, right? This is the futures contract. So we may actually see some fun and games off of the lower time frames and off of the various different derivatives, like forwards on OKCoin and MEX and all that kind of craziness. But I like this, and keep in mind, we're coming into the weekend. These guys won't even show up again until Sunday evening. But I really like the idea of following this 4 hour, and I'm thinking, what would a top look like here to create that second M in RSI and all that kind of talk? And I'm thinking head and shoulders here. So we'll see how this plays out. Who knows? Only time will tell. But fascinating. Harmonic level with divergence, gap theory, validating levels, and lots of juicy downside targets. So that's what I'll be watching over the next probably, what is that? That's 31st of January. This looks like, if it plays out symmetrically, this is about the 4th or 5th of February. So it's going to take at least a few days to play out. Now, while that's going on, I've talked to you guys about this before. I think that some altcoins, this is a coin picker's market, some altcoins just look fantastic. Now, somebody asked me yesterday to take a look at something like a link, and I have to say, and I posted this chart in the comments, if I wanted to be a buyer of Link, this is where I wanted to be a buyer. So up top here, that's pretty tough. If we look at it versus US dollar, same sort of thing. Where are the W's? Where's the bottom end of the range? So being a buyer here, that's tough. Now, you could trend continuation trade this. Bot setup's taking you higher, but you have to understand that's a huge risk window. So this probably isn't an idea that I'd be interested in. So what would a guy like Brian be interested in? In this space, I love names like this Stratus right now. Just looks so sexy. Look at that. Nice down, bottom end of his range. Now we've got reload zones. We got little reload zones within reload zones. Little divs. Willie did go stupid. W's an RSI. W's an OBV. And hello. There's a nice little inverted fractal. And you can see the son of a bitch is running even as we speak here. So that's the kind of trade that I like in this kind of market. Caveat emptor. I'm not telling you what to buy, but if I was stepping in on the buy side in crypto, that's the kind of name I'd be interested in. Just recently we kind of talked to you guys about SIS, same sort of thing. Look at those reload zone levels. That's just insane. So that's the kind of buyer that I'm in this kind of market. And, here's another one. This one's awesome. Went in, stepped in at the bottom end of the range, the W's and all that kind of craziness. And look at what's happening here now. Fantastic. So I might look to sell some of this up top here. But frankly speaking, look at this. This is ridiculous. This is the kind of market I think we're in here now. Look at this. I actually think it's not unrealistic to actually shoot for things like a 22-to-1 risk reward here. I don't think that's unrealistic. Maybe sell half on a double, get yourself free position, whatever. But man, there is a lot of upside in a lot of these little names. And I love Mono. Mono is one of my sort of sentimental favorites in this space. So, this one's gone. You can't touch that now. But there are lots of them that are just sort of sitting. Remember I told you guys this one repeatedly over the past few days. This Wan chancing, and I always mispronounce it, right? But sitting right at the bottom end of his range now, starting to W out, and there it goes. I missed that one. So it just goes to show, it's kind of funny. But at the same time, too, they're not always going to work this way. Sometimes they crap out and they go through the bottom, and you got to walk away. But if you just put $1 into this thing, right? And I don't know, let's say maybe your reloads on this somewhere down in this area at like 18 cents. Can you see a rally up to the 50% rule should be able to give you a double? Let's look to maybe sell half of your position on some sort of spike up into here, and then you got a risk-free trade going forward. I don't really mind that. If you had taken a risk down against these levels and even gotten stopped out, well, okay. But I think there's a really good chance on a lot of these kind of names you can get yourself a risk-free position here, especially heading into the spring, summer. All right, I'm going to leave the free broadcast at that for today. Sure hope you got some value out of that. Got to tell you, I'm a little bit bummed about risk here. Stock market sure looks heavy. Not a great way to finish the month of January. This is going to be an ugly, ugly year. Oh, guys. Blech, yuck. All right, well, have yourselves a great day. Try to play from a position of strength. Make sure to pay yourself when this market gives you the opportunity, because I got a funny feeling the paydays are going to be slim in Stockland this year. All the best, and bye for now.